The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. This is from the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania, zip code 19174. Folks, we're going to take a look here at this DAX index. As you can see, over the last few days, we've been in a pretty tight trading range. One of the questions that's already been asked, is that a situation where they have a head and shoulders, and no, it is not, because the right shoulder is higher than the left shoulder. That negates that the worst it should be is equal. It gets above equal, you're not looking at a head and shoulders pattern based on the way H.M. Gartley talked about it in his book, Profits in the Stock Market, from 1937. So pay attention to that. Early this morning in the den, we were talking about Mr. Z's posts that he has in the den here, and he posts his trades. And folks, he's wrong sometimes, but he's right a lot. That's the bottom line. I watch him each day. And just to give you an example of that, I just wanted to show you yesterday his post early in the morning, just to bring this up to show you what he did. And we posted this. We'll follow this through a little bit, but you'll notice here that he was looking at that butterfly pattern that was occurring at the 1274 level. The market rallied all the way up $11. There was a possibility we could get up here to this 1288. You'll notice that would be a 78% retracement, but all we did last night was we hit the exact 61% retracement up there at the 1285 level. So we rallied about $12 off the bottom, which is about right. And now we backed off. We're trading down to 1278, which is the 61% retracement of that move again. So that's where the support is going to lie, is between 1278 and 1275. Below 1273, however, we'll be looking at something, a possibility of it being a little bit more sinister to the downside. This is one of the things that we were looking at here this morning, yesterday morning. Let's try that again. We'll put this up here, and we'll be, there we go. You'll see here, this is a 4-hour chart going back over the last several months, and you can see we have multiple ABCD patterns that are telling us we're going to go below the 1260 level, probably down to around 1250. The 1250 is the whole ABCD move from September. We had the high up there at 1363 where we made the ABCD pattern, as you can see. Then we broke down and we rallied up to a 382 retracement very quickly, and now we're heading down. We've had lower tops all the way here during September and so far in October, and so this is what we're looking at, is a possibility. Maybe towards the end of the month would be an interesting time, to take a look at this market, because we should get down to the 1250 level. When we get a little bit closer to that, one of the things that I'll do, in the newsletter, is I'll go to a little bit longer time frame, move out to probably a weekly chart to see where we are, and then also go to a daily chart, to see if these patterns are all coming together. Because what we're trying to do is to line up where the ratios that we're looking at complete with the patterns. That's what we define as our edge. And if we can define that edge that way, that gives us something with a positive expectation, and that's what we're looking at. But again, believe me, folks, it's all about expectation. And all of my frustrations in this business come from expectations that are unfulfilled, and you certainly want to, stay away from those. Let's talk a little bit about the Dow Jones this morning, because a lot of the stocks are in the news. I wanted to show you, this is the stock yesterday of the Dow Jones. You'll notice that from the high we made on Sunday, we came down and made a perfect 61% retracement yesterday right near the close at 23,220. That completed the end of the October bear market. as you can see, and then it's completed at ABCD pattern this morning. And you'll notice from about the 2300 level to 2400 level, that is all the stocks of the big ones that are out there this morning reporting earnings. We've got, let's just read them off here. We have 3M is out there up quite a bit. Caterpillar is up a lot. And I believe United Healthcare, and also, I'm not sure about Boeing, but also Goldman Sachs. Those are the real heavy weights in the Dow, and because it's price weighted, that's what pushes the Dow up 140 points. The S&P and the others are not quite doing that, and we'll see if that is going on. I don't understand your question, Jay Bird. I really don't understand it. Okay, by the way, I chatted with Larry Williams yesterday down in St. Croix, and he's under a lot of stress, folks. He has no electricity. He has no telephones. All he has is internet. All of his stuff is taken care of by he has generators, and he's running everything on generator. He has his own fresh water supply, and he has his generators. He's okay, but he's basically living in he refers to it as almost living cave-like. But they're not supposed to open these hotels in St. Croix till 2019. So this country is going to be really under a lot of pressure. The one thing that he did say, and I would like to mention it, he said that the way that the government, the FEMA people are down there helping, he said, is just totally unbelievable. He was very, very happy about that. He also, I don't know if you know this, but he ran for senator in 1980, and out of Montana. He was didn't quite make it, but anyway, that's what we're looking at here. So just keep an eye on some of these other markets that we're watching, because it's going to be very, very interesting. We had a question this morning about the wheat. So we talked about the wheat yesterday, trying to buy the wheat at that 420 level in the Christmas wheat when we went down into new low ground. We got down to 423, 3 cents away, and then the market really turned around and rallied, well over 14 cents, and now we're pulling back. My game plan on the wheat is, because we've hit some type of a bottom in here, I want to see what the retracement is going to be here in the wheat before I decide of what's going on with that. So we'll watch that. Thanks for posting these in here, Mr. Z. We got the Boeing is up $1.65, Caterpillar up 7.7, IBM up 80 cents, Minnesota Mining up 630, United Technologies up quite a bit. So those of you that bought those call options yesterday should be very, very happy. Anyway, we'll see what's going on here, and we'll go on from that level. In the grain markets, a lot of bullish news about soybean oil, folks, but soybean oil is really up against some really stiff resistance here. Let me show you this chart here of soybean oil, because I want to get it. It's not up to date, but you'll be able to see the price. Hold on one second here to get it in here. I don't have a chance to get it up to date, but you'll notice that 1.618 level there at 34.50. It's having two highs now, 34.50 and 34.55, 2 days in a row. We're trading a tad below that right now. That's a 61% retracement, folks. We have to go blasting through here pretty quick, or oil could get ready to go down, even if it has bullish news. 877-977-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back. And 1 second, please. We are looking at a chart of Microsoft. You'll notice here we have a large ABCD pattern that we have forming that completes up here in the 79 level. We hit 79.34 yesterday. This is a an extension pattern, of course, because we have several ABCD patterns that are there. We also have a 3-drive pattern since August, as you can see. The important thing to watch, there are 2 really important gaps here on Microsoft. The first one, of course, is from last Thursday. You'll notice that gap was at 78. And then if you'll go back to October the 4th, you'll notice that we also left a gap at around 75. Now, this is not much of a correction if we go down to fill those, price gaps, but the longer term, it certainly could be a little bit more devastating to the downside if some type of news would come in and make the market go potentially a little bit lower. Now, Mr. Prechter came out with his, believe it or not, he came out with the November and December issues of his Elliott wave theory, and I was happening to review it. One of my friends from here in the den sent it to me, and I was looking at it. There were some really, really interesting charts to look at. But the one that really caught my eye that I've been harping about here for a long time is this volatility index chart, where it shows where we are as opposed to the speculators making a bet that the volatility is going to continue to fall. Folks, yesterday we posted that chart on the VIX index, and as you can see here, we actually, we haven't made new lows in some of those indices. I know each one of them is a little bit different, but it's not been a collapse. And when you stop and think that the Dow Jones has rallied 1,500 points without any, without a correction, and the VIX didn't go to 6 or 5 or 3. That in itself is an amazing phenomenon. One other thing that I don't want to take any, of his great information away and give it away free, but the 2 charts to me that were most important in his letter were the charts on debt. One was there were three types of debt that he looked at. One was automobile debt. Another second one was consumer debt, and the third one was overall debt. And if you want to see a parabolic chart, that's the one you'd look at, because it looks like Bitcoin. I mean, it's just absolutely straight up. By the way, Bitcoin is now trading around 5,600. That puts it down 580 points from the 1.618 expansion that it made at 6,186.50. The exact 1.618 number was a 6,186.50, but it printed 6,189. So it was within 1.5% on a $6,000 stock before it dropped about 5%. That's one of the reasons why I do look at the ABCD patterns, because it's the structure that really describes, what's really happening in the market pretty much as anything that we look at. So that's what I'm looking at. Yes, it could be. Oh, yes. Thank you, Tucker. The other one that was in there that was really, really crazy was the student loan debt. That was, that was really another one that was, really, really quite big. I wanted to bring up to this chart here from the New York Stock Exchange Index yesterday, just to show you what's happening here. You'll notice that from the 13th of October to yesterday on the 23rd, you'll notice that we had a ABCD pattern complete at that point. What's interesting here is that the sell-off that we had between the 17th and the 19th, that's the same amount of sell-off that we had yesterday. So that's probably why the market is rallying today, using the news from all these other things to make it see, what's going on in some of these things. So, but it's, folks, like I said yesterday, it ain't a question of when, or a question of if, it's a question of when. And when they start spanking these people that are long stocks, they're not going to use a rubber mallet, folks. They're going to use a really hard piece of oak twig, is my guess, or maybe even a black whip. Anyway, that's just my opinion, of course. You just don't know what's going on. All righty, let's move on here to the next one here, and okay, we'll see what's going on here. Oh, there's Sherwin-Williams. I had a job at Sherwin-Williams in Chicago. I was getting ready to go to medical school, and I changed my mind at the last minute. But I worked there for a month where my grandfather and my father had worked during some time, but that was an experience, but we'll not worry about that anymore. Someone's asked a question about the Bitcoin. The first support in Bitcoin, folks, will be around 5,300. That's the old highs. If you remember, we broke down to 3,000, and then we took out that C point, which was 5,300. If we get below that 5,300, that would tell us that we're most probably looking at a more serious move down in Bitcoin, if not, a multiple top. Boy, folks, I've seen a lot of things on TV over my history of these markets, and boy, there's a really divided group of people. Some people think that Bitcoin is the next tulip bulb mania. When you hear the Prince Alweed from Saudi Arabia, Jamie Dimon, and some other really smart people, and then you get some other really smart people on there saying that no, cryptocurrency is here to stay. And I have to go along with my good friend Don Jameson, who knows more about these cryptocurrencies than anybody I know. He's been in Bitcoin for 4 years, and he really thinks it is something that is going to be a factor. But the problem is that the Bitcoin is limited to a certain amount of capitalization. There's only so many Bitcoins that can be issued. They cannot be split. So that capitalization is going to be tapped a little bit. But here again, there's so much computer stuff that comes out. God only knows, what could be the level of the next one. Yeah, Ghostbusters would probably be the next way to look at it. So we'll watch that as we get through this. It's hard to believe, folks, that we're finishing October already, and this is, if you remember from historical purposes, October is the single most important month of the 12 where highs and lows are made. In other words, more highs and lows are made during the month of October than any of the other 11 months. So this is certainly, unless that low we had yesterday and the Dow Jones was the low, I would assume that we're probably looking at a high somewhere in this neighborhood, if nothing else. So we'll watch it with a little bit of close anticipation. Regarding the nominations of the Federal Reserve, folks, the market might shake it a bit, but just because of people reacting different to it, but that's not going to make a whole lot of difference. It didn't make any difference from 2009 to where we are now. If they come in and continue doing what they're doing, then maybe it'll continue going up forever. But I've never understood quantitative easing. Doesn't make any sense to me. But if that's the way it is, that's the way it is. A lot of things don't make sense to me. So we'll see how this thing all shakes out as we go through. By the way, if you have any questions, you can call in at 877-927-6648, and we'll be right back after these few words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and on a programming note, I will not be on the show tomorrow So I have a travel date. Anyway, what we'll be looking at possibly on Thursday or Friday, I'm either going to have Stan Harley or Bill Meridian on to talk about the markets. But I posted a chart in here from that was on Bloomberg that was forwarded to me by Elliott Wave, a theorist, and I just wanted to let you see, folks, this is known as the Titanic Pattern. If you notice all those black things at the bottom, you know, where all those oscillators are, that's the iceberg. So we're going to see how this thing ends up. But we're at record levels we've never seen before, so it's going to be fun. And hopefully it'll be fun for everyone, as it usually is, and I'm sure that's the way it will be. Now, I do want to talk a little bit here about the bond market, folks. We've been talking about this. Let's do the notes first because they were the first to break this morning. We'll bring the notes up to let you see that we've broken below that key support. The thing that we had, that 382 rally up there at that 125 level, did not last very long at all. That tells you that we're most probably going to break below that 151.25 level in the bonds. In fact, we have already done that. Let's have a caller, I think. Hold on. We got a caller from Philadelphia. Mr. Z, are you there?
Two guys in Philadelphia at the same time. Who'd have thunk?
Yeah, who would have thunk it, huh? What can I do for you, my friend?
Good morning, Larry. Wanted to ask you about the bond market. Very specific question. The bond futures peaked at 158, dropped to 151, down 7 points, bounced to 154. Question. Are we headed down 154 less 7 to 147? Is that what this pattern is telling us right now?
Yes, it is, John. And there's several things that make it viable. The first is you can see that we had really strong support at that 78% level at 150-125, hit there 3 times, and then today it broke it substantially. We also did that in the notes, but that was nothing more than a 382 off the high from the 13th of October. It's a bearish pattern, almost as bad as platinum's. So it does look like interest rates certainly want to go higher here, i.e. lower bond prices is my guess. If we get below this 151.08 level, and we're not very far away from it, we're only about 8 or 9 pips away. If we take that out, then you're looking at that ABCD structure that you just talked about that's going to take it substantially under 150, in my opinion.
Larry, confession of a trader, I shorted the bonds up at 153 3/4, 153.24 area. That was on that last bounce. That was Thursday when bonds popped in response to stocks bottoming, and of course stocks sold off, made a low early Thursday, and then surged. Of course, I unfortunately covered a shorts far too early in the ZB. Question. Can you share with us what trading tactics one might try to employ here to refloat the market and looking for a break of 151, moving to 147, and not getting clobbered if you're wrong?
Okay, let's address your first question, John. In fact, you got out a little too early. John, that's never happened to me in my trading experience. I always sell on the exact high, and I usually buy on the exact low, so I really can't answer that question with any degree of certainty. John, the only people that get the highs and lows are God, and she doesn't trade that often anymore. So you just have to shake it off and move on, which I know you do. But, I can't sell weakness. When it broke below 151.25 today, I said, well, there's going to be some here, follow through. But what I would do, if you look for it, look like what we had over the last couple of days is a small ABCD pattern, coming in at a 382 retracement. That would be probably about the only thing you could do to get in. And it will most probably give you, some type of a rally just from all the rhetoric that's coming out of the administration on who's going to be the next Fed chairman and stuff. And it wouldn't surprise me if he doesn't change anything. But, who knows?
Who knows is absolutely right on that score. Okay, thanks for sharing that thoughts. Wanted to just follow up and ask you, can you pull up the January soybeans and see if you see the case for a bottom forming right in here, within 5 or 10 cents, please?
Yes, not a problem. That is one that I'm focusing on here over the in the newsletter over the weekend. You'll be able to see here when I bring up the chart here for the soybeans. You'll notice I have these channel lines in the real dark red, as you can see here. That would be in here about another about another 10 cents lower, around the 972 level. Would be a 78% retracement off the low of October 5th. That would be that would also be a Gartley if you broke it down into an hourly chart, because we had that higher high on those couple days here on Friday. So that's what I would be looking at, is around around 972. I don't know where they're trading this morning, but 972 to me would look like it would be a very interesting spot, to take a look at them.
Just for what it's worth, the January contract is 986. Down a mere 2 cents from the price posted on that chart you put in Tiger TV.
Yeah, it's actually on that. It's holding up relatively well. The meal is the weakest, and that's partly due because the professionals are buying soybean oil and selling soybean meal in the crush, and that's the oil is right at the 61% retracement that I posted earlier in the show today, and it can't get through it. It may get higher than Friday by, I think, 2 cents, and it didn't go anywhere. That's not a definition of a breakout, in my opinion. So I would be really careful being long soybean oil in here, even though the news is really, really bearish. So bullish. I'm sorry, bullish. And so I'm watching that one very closely also.
I appreciate all that input, Larry. One last question I wanted to ask you, which frankly isn't market related. But given that you and Sarah have the history and regularly travel to China, do you and she in conversations come away with any conclusions as to what lies ahead investment-wise after the current premier seems to have consolidated power in a very, very big way?
Oh, John, you get a big zero on that one, my friend, because we're not into that pay grade stuff. So there's nothing we can hear. If we hear it, it's because somebody read it in the newspaper and is telling us. That's basically the bottom line. And as you know, I don't listen to the news because I really actually don't trust the folks. So anyway, that's neither here nor there. I hope that helps.
Well, I'm slow to pick up on that myself, so you and I are in the same boat.
Hey, thanks for calling in, my friend, and may God bless, and have a wonderful Thanksgiving, my friend.
Good travel to you.
Okay.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I reposted the chart that I put earlier this morning of the ABCD pattern. We went through there this morning on the opening. We went above 23,400 in that Dow E-mini without any trouble at all. But what I wanted to show you is the fact that what's really happening here with the E-mini S&P. We'll bring it up. Hold on here 1 second here. Oh, dear, what's happened now? There we go. We should be okay. And here's the E-mini S&P could only make a 50% retracement. If you were following the NASDAQ, it couldn't even make a 382 retracement, and of course now it's down on the day. So, as the famous words of one of our esteemed leaders, Basil Chapman, we have a bifurcated market. So I love that word. I don't know what it means, but it sure sounds good. Basil will tell me someday. Anyway, this is rolling over, folks. We're seeing it in the news, and so anybody that buys this kind of strength, they deserve to get punished. But sometimes they don't get punished. You never know. That's the way it is. Anyway, we'll keep an eye on that. What's going on here? I wanted to go with the currencies here for just a second because there's nothing really changed here. We take a look here at the euro. This is a chart that goes back well over a month. And you'll be able to see it quite clearly. It's an hourly chart. It covers 3 weeks, I'm sorry. And you'll see the ABCD3 drive that we had at the bottom there. We had a huge rally, and then we had to move down, to move up to the 786. That's up the ABCD to come in right around this 117 level. We're trading around 117. Half, I believe, somewhere around that level. So watch that. That market, I believe, is also turned over to the downside, and I believe that the dollar index is, still going to be heading higher. That's really what what it looks like anyway from the cheap seats here. So anyway, let's just pay attention to that because it's going to be quite interesting. Someone's asking about how do you handle news, folks. First of all, I don't do hardly any stock trading. Is the understatement of the year. I focus on commodities and foreign exchange. 85% foreign exchange and 15% commodities. I follow about 9 or 10 commodities pretty actively, and when you do that, you're watching at about 15, 16 things every day. Of those, you might get a few good patterns, and then you have to be real selective on what go. Oh, Peak, you're a riot. Anyway. The folks here in the den, they make some incredibly funny jokes. Anyway, that's the main thing that that you have to realize is that these markets act a little bit differently. And so when I'm looking at, the 6 major cross rates and then the 8 commodities that I look at, of those 14 things, I try to pick out 2 or 3 of those that look really interesting. And of course, intraday, I don't watch very much because the first hour or two, I'm pretty busy. After that, I don't come by the computer very much. I let the price alerts go off, and if it's right, fine. If you take a loss, fine. And you just, basically go on and, see what happens. That's all you really can do because you don't know any more than that. Someone's asked a question about General Electric. General Electric is the oldest stock in the Dow Jones Industrial Average. It's one of the few stocks in the Dow Jones that didn't go bankrupt. American Telephone, I believe, went bankrupt 2 or 3 times between the 20s and forward. And there's a whole bunch of them that are, not there anymore because when they don't like them, they kick them out. That's basically a family business, folks, the Dow Jones News Service. And when Leo Malamed wanted to have the Dow Jones as the lead, but the Dow family would not allow it. I happen to know this because Byron Tucker was involved in all that stuff with Leo because he worked for Leo. And they didn't want to have anything to do with it. They wouldn't have any association with the futures market. And then after the S&P, became really big, Leo wouldn't talk to him because they had to go to the Chicago Board of Trade to have the Dow Jones put on their symbol right there. So anyway, that's literally what happens. And the NASDAQ is a very new thing. That's only since 1972, I believe, is when it came out. So all of those is, big. When I first started trading, the value line was actually much, much bigger than the it's still in business, but I haven't seen a chart on it in over 20 years. And it used to be that was the big one. Anyway, that's what we're watching here on some of these things. So let's just keep our eye out at what's going on. Let's just check the markets. We did make a new low here in the NASDAQ. We did get down to that magical level that Tom O'Brien talked about, which was the 60-50 level. So watch it, folks. This is not a bullish scenario here in this stock market. Neither this news that comes out in these big gap up. That is not good stuff, boys and girls. It really isn't. That's not a lot of volume that happens with. And it's pre-market, which is even thinner and thinner. So just, be careful. That's, the bottom line. Now, the bonds have just done an interesting thing. We went down to the 151.14 level, and now we popped up above the old low at 151.25. That's actually a relatively positive sign for bonds. In fact, they better stop right here at the 151.26 to 151.28 level, or they could be a pretty good reversal today. But the fact that they were able to rally 10 pips after all those lows was made is actually a positive sign from a technical basis. So that's one of the reasons why selling weakness is such a tough thing to do. We've had a question about the gold market. Folks, we already talked about the importance of that 1273 level, and we've now pulled back to a 61% retracement. We're trading there right now at the 1278 level, and I believe that we're still heading down to that 1251 level. There's just too many ABCD patterns that are there that make it look very, very interesting. So those are the one that I'm looking at early this morning. Those of you that like 382, you might want to pay attention to the wheat here, because the Christmas wheat's low today from the low yesterday was an exact 382 retracement at 433. Well, we're only trading at 435 right now, so that's a very, very low risk if you wanted to buy against that 432 level. And believe me, if this one works, it would be one of the Halloween scares of the year, because there's bearish fundamentals out there on the wheat. And yes, the market comes out of there very, very strong, because sometimes when these fundamentals change, we don't hear about it for several weeks. So we'll just keep an eye on that one, is what I would be sort of watching as you go through these things this morning. Anyway, that's it. We got the little break coming up here, and then the old show's going to be over a little bit. Remember, I won't be here tomorrow. but I will be back on Thursday and continuing on Friday. So let's make sure we have it. Get back in the show and maybe see Stan Harley or Bill Meridian on the show to give us some input. We certainly enjoyed Norm Winsky last week, did a great job for us, so we want to keep a close eye on these new ones that come up. Hopefully a Thursday. I don't know if I'm going to make it Thursday, but Friday I should have one of the two gentlemen on as my guest. As we finish up this segment of the show, we got Bitcoin trading at around 5,600. Not that it means anything to anyone, but we'll see. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I wanted to post a chart that I think is extremely important. This is the Dow Jones Industrial Average. As you can see here, I've marked in some patterns here, but the key spot is to look at this chart closely. Folks, we've never seen this before in the Dow Jones Industrial Average, where we have 6 gaps in such a short period of time. Remember, we've made 52. Today will be 53 new highs. We've never had that many highs in 1 year ever. But the key here are these gaps. Even with the big down move that we had yesterday of almost 100 points, we didn't even fill in the gap from last week. So we're looking at 6 gaps there, starting, way back in late September. We've got 1, 2, 3, 4, 5, 6 gaps. I mean, and when they start to be filled, folks, it's going to be like a waterfall. But who knows? Maybe these won't be filled until 2019. That's it. I don't have any time to talk about the natural gas, but I'll try to be able to do that. We'll see what's going to happen. Thanks a lot, Steve, for posting that about the value line index. I would really, I'm going to take a look at that. I haven't seen that chart in a very long time. So I can remember 1983, I had a spread on. I was long the NASDAQ and short the value line. It was probably the greatest trade of the 1980s because the value line went straight down and the NASDAQ went straight up. But I got out of it a little bit too soon. That was before I learned, Mr. Z. I know you asked that question. Hey, folks, you're never going to get the high tick or the low tick very often. Sure, that's lucky if you get it, but it's no big deal. Only one person gets the high or low, and she doesn't tell us very much, remember? So anyway, pay attention to that, and I'll be back with you guys here, God willing, here on Thursday. Everybody be safe. Make sure you use stops. And that's always important because, you're wrong a lot, but also you try to be right a lot. So 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.